Did you know that your retirement dollars could be getting a haircut depending on which state you call home? That's right. While the federal government might take a slice of your Social Security benefits, some states come back for seconds. And in 2025, this patchwork of taxation continues to evolve, potentially costing retirees thousands of dollars each year. Today, we're breaking down which states are reaching into your Social Security checks, which ones have recently changed their policies, and most importantly, how you can keep more of what you've earned after decades of hard work. The good news first, most states completely exempt Social Security benefits from state income taxes. That's 38 states plus Washington, D.C., where your benefits are completely safe from state taxation. But what about the others? As of 2025, 12 states still tax Social Security benefits to some degree. Colorado, Connecticut, Kansas, Minnesota, Missouri, Montana, Nebraska, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. But there's more to the story than just this list. Many of these states have been making significant changes to their tax policies that could affect your retirement planning. Take Minnesota, for example. In 2023, they passed legislation to gradually increase the income threshold for Social Security taxation. For 2025, Minnesota residents with provisional income under $89,000 for individuals or $113,000 for couples may qualify for a full exemption. This means thousands of Minnesota seniors will see substantial tax relief compared to previous years. Colorado has been phasing in similar changes. Their Tax Cuts and Jobs Act expanded exemptions for retirees under 65, and those over 65 now receive even more generous exemptions. If you're planning to retire in Colorado, these changes could save you over $1,000 annually depending on your income level. Nebraska is another state making waves. After years of fully taxing Social Security, they began a gradual phase-out in 2022. By 2025, Nebraska will exempt 80% of Social Security income from state taxes, and they're scheduled to reach 100% exemption by 2026. That's big news for Cornhusker State retirees. Now, what about states like Connecticut and Missouri? These states use complex formulas based on your adjusted gross income to determine how much of your benefits are taxable. For instance, in Connecticut, if your AGI exceeds $75,000 for individuals or $100,000 for couples, 25% of your Social Security benefits could be subject to state income tax. Above certain thresholds, that percentage increases. But here's where things get interesting. Several of these 12 taxing states also offer credits, exclusions, or deductions that can offset these taxes. In Missouri, for example, individuals with adjusted gross income under $85,000 or couples under $100,000 may qualify for a full exemption despite being on the taxing list. So what does this mean for you? Location matters enormously in retirement planning. The difference between living in a tax-free state versus a state that fully taxes benefits could mean thousands of dollars in your pocket each year. For a couple receiving the average Social Security benefit, the annual difference could exceed $3,000 depending on other income sources. Here's what's most important to understand. These state tax policies aren't set in stone. In recent years, we've seen a trend toward reducing or eliminating these taxes as states compete to attract and retain retirees. West Virginia, for instance, has gradually increased exemptions and is considering full exemption legislation. If you're approaching retirement, factoring in state taxation should be part of your financial planning strategy. Consider following points: how your current or potential retirement state taxes Social Security, whether your income will qualify you for any special exemptions, how your other retirement income sources will affect taxation, whether recent legislative trends suggest tax changes are coming. Remember, too, that Social Security taxation isn't the only factor to consider. Some states with no Social Security tax have higher property taxes or sales taxes that could offset any Social Security tax savings. At IRS Tax App, we're committed to keeping you updated on the latest tax developments affecting your retirement security. If you found this information valuable, please hit that like button, share with friends or family members approaching retirement, and subscribe to our channel for more tax-saving insights. Your financial future may depend on it.